Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And today with me, I have none other than Ben Jessel. Ben, how are you?
I'm great. How are you doing, Aviva?
Yeah, I'm doing pretty excellent. And for all of you out there in Podland, if you don't know who Ben Jessel is, he is a writer, he is an economist, he is a person extraordinaire. So, Ben, I thought we would start out this week talking about people's personal finances and their perceptions of money, and also other external influences on their finances and their money. And I wanted to start really with this interesting article that I read. And it was an article about a girl in the United States of America, in the state of Washington, who was let go of her job, and she was making $16 an hour. And her rent was $12.50 a month. And so this whole article went on about how she was very upset, obviously, losing her job, and that she didn't know how she was going to get another income. And then at the very bottom of this article, like in most articles these days, there was the comments section. And I really thought it was interesting, many of the comments there, because people were observing that there was no way that this girl making $16.50 an hour should have ever rented an apartment for $12.50 a month. Because quite frankly, if she knew anything about finance and finances, she would never have signed the rental agreement because she just couldn't afford it. And people were saying in the comments section, the most that she should have rented anywhere for would have been $900 a month. Of course, there were threads going on this saying, well, you have to take into account all these different factors, as well as also her utilities, her rent, her food, her transportation. And by the time they did that, they said, really the most she could afford for her rent would be approximately $600 a month. And so this went on, and I really thought about it because many people these days, as we've already said in previous podcasts, they have no savings, because they don't know. Really, it's not taught in schools very well, if at all. Finance and saving is not something that is taught from an early age, I don't think, in any school system. We know that in terms of crypto. Even adults don't know about this right now. But people should know about fiat money. They should know about their own country's government tender. And so I started to do some research on everything to do with finance and how people perceive finance. And I came across an article which I thought was incredulous, to be quite frank with you. Many people in America, I think it was 29% of Americans, believe that the US dollar is still backed by gold. But it goes even deeper than this because really most people have no idea what the US dollar is backed by. They have no idea if it's backed by oil or some other commodity. So most respondents really did not have a clue about what the US dollar actually meant, what that piece of paper actually meant. And I'm going to do a spoiler now for everybody in the world who's listening to this. But the gold standard, which backed the US dollar until 1971, pretty much that was the end of it. After that, there is nothing. Literally, there is nothing backing the US dollar except for a promise from the US government.
Yes, you're right, Aviva. You're right. There is nothing intrinsically backing it. It is just purely the expectation that, the Fed is sitting behind it and supporting it. But you can't redeem your piece of paper that has a dollar written on it for gold like you used to be able to, certainly in the UK. We came off that system in the UK, certainly in the 70s. And that was kind of a big change where we started to detach ourselves from an underlying commodity that could be exchanged.
This is a pretty basic fact that I think most schools should be starting with from an early age to say, hey, holding up a US dollar in class, and this would probably go for most countries, I would think as well. They should stand in front of the class and say, in the example of the United States, the teacher should stand in front of the class and say, up until the end of World War II, the U.S. had 75% of the world's monetary gold, and this dollar was backed directly by gold. But that all changed in 1971, and basically now this dollar is backed up by trillions of dollars in debt. I mean, that's what really the lesson should start with. And then they should go into how you should not get yourself into personal debt while trying to field off questions of how any country can be in trillions of dollars in debt. But what do you think about the idea that most people don't know what backs the US dollar, and that 29% of Americans believe that the US dollar is backed by gold?
It's mind-bending, isn't it? I think what this has started to be thought of again because of the money printing, to use probably an incorrect term, but the money printing that's happening right now with the US Federal Reserve, where we are printing trillions of dollars of money, literally making it up from thin air. And it's certainly calling into question a number of commonly held kind of views around, well, you can't raise spending because, you have to ensure that you're bringing in a certain amount of money. People are questioning, why do we pay tax if we can just print trillions of dollars? And then other people are asking, well, do we have to ever repay these loans? It's a hard question to answer succinctly, because you have seen our national debt growing year over year significantly by orders of magnitude. And there's a question about whether this is sustainable. I think what's kind of quite interesting to think about this is there is debt, and the other important factor which makes everything relative is gross domestic product, how much the country is actually making as a value. The other aspect to think about is inflation, which is how the value of money is eroding over time. So one of the things that Reagan did, for example, was that he let inflation run rampant, which actually had the effect of taking all the debt that existed and effectively making it worth a lot less because inflation was eating up into a lot of debt. So the way you can argue is that with inflation and with the growth of the economy, it almost doesn't matter what the debt is as long as the ratio between the two is either kept constant or certainly the GDP is increasing. A good example of that would be that maybe you could have borrowed $10,000 to fund your small business. Maybe your small business is only doing $10,000 in the first year. That's 100% loan to ratio. But maybe that expands the business to $100,000 a year. Well, now you go and borrow $100,000 and so on and so on. So on one measure, it may look like you're just increasing your debt by this huge amount, and the questions would be, how can you possibly service that? But then if you look at it in terms of the value of the business, how much revenue it's kicking off, it's still proportionate. So this is the big question, which is that as we borrow, is that money proportionate to the gross domestic product of the country and as it grows over time? And or inflation, so that debt kind of becomes relatively small over time.
That is going to probably lead to a lot of people scratching their heads. Many people who have no idea about finance through really no fault of their own. I feel that's an educational system problem, and people need to really, especially as adults, read into this and understand a lot more, given an economic situation which we, I think, are all facing because of COVID-19/coronavirus. And I know everyone's sick to death of that word now. I know that. Even me saying it, I have to take a breath before I say it because I'm sick of it. There's an economic downturn that is facing us. Would you not agree with that? That people need to start upping their game and upping their knowledge about finance, because there's a situation that's about to hit us, and we have to understand the basics before we can even understand about loans, loan to debt ratios, everything else.
No, and certainly it's important to fully really understand your finances and prepare for things like this. I mean, a lot of people say that you should have at least 6 months in the bank any one time so you can ride out shocks like this. And also, it's worth remembering that a whole generation of people who've never experienced a recession or even a bear market. People like you and I, who are maybe slightly older, certainly do remember 2008 recession, 2000 recession, things of that kind of nature. And that can skew people in terms of not really realizing that they have to prepare. Now, that's only one part of it. The other part of it is some people just can't because they are in financial hardship as a whole. These are people that maybe are low income or have, children or single parent families and things of that kind of nature. There's certainly a scale here. There's a scale between complacency or maybe a lack of education. And then there is at the other end of the scale that people just purely do not have the means to make ends meet. I remember my father being shocked that I never balanced my checkbook. I don't think I'd even know what to do with a check if I saw it, let alone balance a checkbook. It's just something we just don't do anymore. And a part of that is because we do live in this kind of, this society these days, which is very much material. It is about using credit cards and things of that kind of nature. People don't necessarily save for their future in the way that our parents' generation did, because now we do have many more luxuries and many more expectations of getting TVs and all these kinds of things that we wouldn't have done in the previous generation. That said, I do think it is a continuum. I think there are people who are living beyond their means because either they're not financially literate or they're not being fiscally responsible. But right at the other end as well, there are people who are in a disadvantaged situation where they are low income earners. Maybe they also only have one earner in the household, maybe the single parents, for example, with many children. My heart goes out to single parent nurses who live in the New York district, particularly now, particularly kind of those that may be single parents who have an awful lot of outgoings, a lot of responsibilities, aren't getting paid an awful lot, but also living in one of the most expensive metropolitan areas of the world. So there are people in dire financial hardship like that it's not about responsibility, it's really just about having their means. An interesting kind of parallel, organizations like Grameen, which is a microfinance based organization, they do something very interesting. They actually loan money to women in Africa to help them with business. And one of the reasons they do that, they do these loans that have a 99% repayment rate. So a higher repayment rate than you get anywhere in the world. And one of the reasons why is that they've identified that those that have the least amount of money have become so adept at managing their money because there's so little of it, that actually they have a very good approach to fiscal responsibility. And if they do have the money, they actually kind of manage it very well. Particularly kind of the women in the household in a lot of these kind of developed countries who are effectively kind of running the household, everything kind of from financially all the way through to kind of caregiving as well.
I'm going to then very quickly segue over to something else, which I found quite incredible. And that is Richard Branson is asking his staff to take 8 weeks, 2 months of unpaid leave. This is in the midst of him shifting only some of his billions of dollars into a tax haven. And this is a guy who is also asking for the government to give him a state bailout for his airline business. So let me just reiterate this. Richard Branson, I should say Sir Richard Branson, is asking for the government not only to give taxpayers money to his airline to save it when he has billions and billions of dollars hidden all over the world. He has just transferred part of one of his holdings, 1.1 billion, his stake in Virgin Galactic Holdings, to the British Virgin Islands, and he's lived there for the last 14 years. But at the same time, asking his own staff, his airline staff, to go unpaid for 2 months. Yeah? So that's the first example. The second example, which I love just as much, is with Jeff Bezos. Now, I'm really starting to think that everyone is losing the plot, especially with the precarious nature and situation of what's happening within the economies. I can't even say this with a straight face. Amazon's CEO, and everyone knows Jeff Bezos. I mean, everyone knows who this guy is. He publicized a relief fund asking the public to donate for his contract employees during the pandemic. And he's asking the public to donate money. This is the world's, if not one of the world's most richest men. This guy can afford anything, and he can buy countries. And he's asking people for money for his staff. What is wrong with this picture? Maybe I've introduced this topic too early because we're trying to talk about how people need to be understanding of their finances. But imagine being one of the Virgin Airlines crew and you are saving your money so carefully every month. And then you learn your boss is saying, hey, listen, you don't mind going for 2 months without any money and, you just deal with it with your own savings because I've got to go shift a couple $1 billion around so that nobody will find it. Do you not find it kind of interesting that if you do understand and know about finance quite a bit, you know how to hide it, and then you know how to screw the very people who work for you?
It's funny, in economics, there's this term which is named the Laffer curve, which looks like a little semicircle. And on one level, you have tax rates, and the other axis, you have how much money you'll get in. And the reason it's a semicircle is that at a certain point, tax rates get to the point that the wealthy decide that they want to try and move a lot of they're very motivated to move a lot of their money offshore or to find kind of certain ways around that. Now, you could argue that these days, actually, it's almost a default that countries are finding all kinds of ways to avoid, companies are finding all kinds of ways to avoid tax without even thinking about marginal increases in tax rates. If you look at all of the cruise lines, for example, they're all registered under foreign flags of convenience, all based off in tax havens. One of the great ironies about the cruise industry is they may actually not get a bailout because they move themselves all offshore to avoid tax in the first place, which is kind of poetic justice for the owners of the company. But obviously the actual employees are going to get a very kind of hard end of the deal there.
And that's the thing. It's the employees who always will get a hard end. And that's the reason why becoming extremely creative with your own finances is extremely important at this time to get a handle on things and understand not only the currency that you're dealing in and that you're being paid in, but then to obviously go a bit further. And the good thing about when people, I guess, used to balance checkbooks is that they were forced to reckon with the amount of money they constantly had in the bank, which I'm sure you'd have to be meticulous about it because every time you wrote a check, you'd have to stop, I guess, and do the math. I mean, I don't know myself, but it made you probably realize constantly, I can't spend more than what I have. It was really only when the birth of credit cards came along that everyone thought it's free moneyville. And of course, mortgages don't help either. But one of the other things I talked about in the very beginning, the survey that was done where they asked people if they knew what backed the U.S. dollar. And by the way, it's just to, again, be clear, the U.S. dollar is backed by the U.S. government and their promise. I looked up some other research, and it's actually quite interesting because they gave people then multiple choices. And there was a multiple choice question, which had to do with something called the petrodollar. People were saying that the US dollar, one US dollar, was backed by a petrodollar, which of course, again, it's not true. But what people also don't know, people don't know what a petrodollar is. Do you know what a petrodollar is?
Let me see if I can do it some justice. So as I understand it, a petrodollar is based on the fact that most countries, when they're transacting in terms of buying or selling oil or derivative products of oil, do it in US dollars. So the US dollar is effectively become the reserve currency of the world, which is used in order to transact. And as we know, oil is the fundamental that powers all of our economies. It's the use of these dollars as a way of transacting to buy and sell oil and derivative products that really kind of is a backstop for the US dollar in itself. Because, there's always going to be this latent demand across the world because of countries that are using the dollar in order to buy and sell oil. Have I got that right?
Pretty much. You have got that right. But I'm going to make it even simpler. Basically, after the Vietnam War, when the spending habits and the payments deficit was so at askew, the Nixon administration decided, in the wake of what they called now the Nixon shock, this was the end of gold backing the dollar, the end of the gold era, and it was a free fall of the US dollar because inflation was soaring. So then the United States struck a deal with Saudi Arabia to standardize oil prices in dollar terms. Now, this is when the petrodollar was born, and it also elevated the US dollar to become literally the world's reserve currency. because petrodollars are basically US dollars, which are paid to oil exporting countries for the sale of oil, for the sale of this commodity. So basically, the petrodollar system is an exchange of oil for US dollars between countries that buy and sell oil. So that was a fun fact that came out of one of these other surveys about, do you know what backs the US dollar? You know, we talked about the US dollar. And I know I alluded, it was kind of like a bit of a segue. We alluded to what happened already with people like Richard Branson and Jeff Bezos. And the reason why that's really relevant, and it's not because of gossip's sake, it's because of how planning for almost anything. In the case of Virgin Airlines, you can be planning and scrimping and saving. You know, the people who work at Virgin, they're not making millions of dollars every month. They're making the kind of money that makes you exist from paycheck to paycheck, especially if you're living in the UK. You said, you know, most people should have at least 6 months reserve in their bank. What's a good way to do that in this day and age if you don't even have a job? How do you do that, Ben? How do you pull that white rabbit out of your hat?
It's difficult. It really is. I mean, you can be frugal. You know, you can plan when you have the money and be very disciplined about apportioning some of your money, even if it's not much, to some kind of rainy day fund or some emergency fund. It can be pretty glib saying that. It sounds very patronizing to say to people, well, you know, you can just use astute financial responsibility. I think that what's interesting is if you look at some of the sports players, I think it's something really amazing. Like over 60% of NFL players end up going bankrupt, which is amazing when you think about these large kind of sports contracts deals that they have.
Jeez.
But, you know, just having that kind of money suddenly kind of washing through your bank account, you know, and not maybe necessarily having a lot of the structures and advice and financial literacy that, you know, other people that maybe are in, you know, more clerical jobs would have. You know, it'd be very easy to overspend, and you know, what you have to do is slightly overspend on your means, and before you know it, you don't have any money left. So, you know, I think this financial literacy thing, it's across the board spectrum. It's not just purely people that struggle to make ends meet. It's also very wealthy people as well that may not have the financial discipline.
This is a really good time with everyone in quarantine to really learn about finance and learn how to manage tight budgets in tight spaces. And there's a lot of resources on the internet about this. But where would you start, Ben, if you were all of a sudden furloughed, you know, put on leave from your job, fired even? Where would you start for real?
I mean, I think one of the things that's worth thinking about is there a source of income that you can start growing on the side? And that could be anything, you know, that could be, you know, something from the gig economy that maybe you can do at weekends. You know, maybe that is a skill that you could learn. For example, maybe it's, you know, some form of digital marketing, website design, or something like that. And over time, potentially you could look to create, you know, a ongoing income stream from that. Again, that's easier said than done. You know, if you're the primary caregiver in a single parent family with 3 children, then clearly you're not going to have the time to do that.
Do you think this kind of environment that's happening, I mean, is it really enough to start just a side job? Do you think that there's anything else you personally would do?
I think there's 2 parts. There's, can you get another income stream? Can you potentially take some courses online? There's a lot of free courses on Coursera at the moment. For example, there's a data analytics course that you can take from Yale at the moment, which I believe is free. So that's another part. You can potentially kind of elevate yourself. And then another useful technique is to sit down and write down your outgoings and expenses and income, or certainly assets. Do that over a period of time and then have a look. General rule of thumb is if over 3 months more is going out than is coming in, then that is going to be ultimately unsustainable. So I think this is a good time to start getting your financial house in order, start making goals so that when you do start to earn, you are in a better place to more efficiently use the money that's coming in rather than having it being spent on things that aren't important.
A hell of a lot of jobs, by the way, that are on job sites like Indeed and Monster. There's still a hell of a lot of people hiring. And I also saw social media posts from Morrison's in the UK. They've hired 14,000 people to be food packers, food delivery drivers, and things of this ilk. And it's incredible because there is going to be many companies going out of business.
Big retailers are really going to be looking to restructure or to go into Chapter 11 bankruptcy, which is a very unique form of bankruptcy that seems to be only existing in the United States, which is a way that you can actually get protection from your creditors by a period of time and then emerge the other side. But during that period of time, the creditors and the employees and people like that are certainly impacted while that restructuring happens. I mean, the U.S. airline industry has been in and out of Chapter 11 bankruptcy more times than I've had hot dinners.
Oh, yeah.
I have seen a number of asset managers saying, look, I think we're going to see a V-shaped recovery. We've already hit the lows already. The fear trade is beginning to come off now. We are seeing the levels of infection stabilize, certainly in New York. Some parts of the community are feeling that we've got through the worst of this and that we're going to see demand snap straight back after what will be a disastrous second quarter, but things will kind of snap back. But to counter that, others have said that this is actually a completely structural change in the economy. Why would you ever open up a restaurant? First of all, we don't know if the pandemic is going to come back. If there's anything like the Spanish flu, it comes in waves. It'll migrate to Australia and places like that. When they have their winter, and then it'll come back when it's our turn. So that is the concern is whether these businesses are going to be resilient enough to come back. And albeit they're getting loans at the moment that will be able to take them across a couple of months anyway. But there's a real concern now that society will fundamentally change because it's people have realized that there are a lot more of these what we call black swan events than we think they are. If you can remember, a black swan event is something that has a very low likelihood of happening, but when it does, it's catastrophic. And psychologically, we always discount all these black swan events because they seem so unlikely to happen, whether it's 9/11, whether it's a global pandemic, things of that kind of nature. So, it's kind of long tail risk that people really psychologically can't get around. Well, now it's happened and people are reevaluating risk. There's a lot of businesses that would have, on the face of it, look profitable, but when you actually zoom out, aren't. And there's a very good argument to say, actually, that if you look at stocks over the long term don't perform as well when compared to bonds as people think they do. The conventional wisdom is that stocks always outperform bonds by a very large amount because of seniority and debt and things of that kind of nature. Whereas in reality, it may be that stocks appear to have these periods of time where they zoom up in valuation, but then become unsustainable and crash down again. There's a school of thinking that said that stocks were overvalued during the Obama administration, that when we had our financial crisis, that the Fed did the put. They effectively backstopped a lot of the banks and these other organizations and continued to push up asset prices in a way that was unstable, which is why we have such low interest rates. And that when Trump came to power, we saw the Trump bump where valuations increased even more. So we'd actually had 2 presidents worth of disconnect in the stock market. Assets being created into a bubble. So what we're seeing now potentially is not actually due to the pandemic. The pandemic was nothing more than the prick to burst an overinflated balloon. What we're seeing now is a reset back to the correct asset levels that we'd expect, valuation levels that we'd expect, that are probably just post first financial crisis. If you ever look on a chart of stocks and you see this horrifying cliff edge, which has been the pandemic and the reaction, well, actually, that's not more than a year's worth of losses. We've still got 6 years worth of losses to get back to the point when people are beginning to blow the whistle on the stock market being overvalued. And that terrifies me. I don't know about you, Aviva, but that terrifies me.
Well, there's a lot to be terrified about. You're looking at sectors right now that even if you're just talking about their stock values, who's being impacted? The hospitality industry, the travel industry, the entertainment industry, the resource industry. We can go on. And these are heavy hitters that employ not even thousands, millions upon millions of people. So if you're looking from a stocks point of view, I mean, are you really going to be starting to invest in anything that looks like a stock in these things right now? I mean, the only stocks people are going to be investing in right now is anything that looks like a COVID-19 cure, anything to do with PPE, which is personal protective equipment. But if you look at what's happening in terms of the values of different asset classes and different securities and things like this, it doesn't even matter what the security is. It's all so heavily dependent on what happens to the economy, and not even just on the scale of the United States, but on a global scale. It all talks to each other, and nobody can really say for sure what's happening. I don't think it's just going to snap back. Are people going to be flooding into restaurants, hotels, even onto a plane? Some people will, because they're going to have cabin fever and they're going to want to get out. But most people are going to be very, very cautious because they're going to think, okay, do we really want to rush into starting to hug and kiss everyone immediately? And people, if they think deeply enough, a lot of stocks will probably be a steal if everything was on the upswing again. And I think it's a bit of madness to say, well, we're going to have this amazing exponential curve that's going to help people not only become successful investors again, but successful workers again. I don't know. Am I just on cloud cuckoo land?
Do you know, I think it's interesting when you look at previous recessions and what's happened and what's come out of them. You know, we saw Amazon being born from the 2000 recession.
Well, do we want to talk about him, that guy? Amazon was born. Amazon was born, and now he's not even giving back. That's great. Yeah, keep going.
Absolutely.
Yep.
You also, and again, I'm not saying this is a good thing necessarily, but you saw the gig economy beginning after the last recession. If you look at TaskRabbit, for example, I mean, that was created out of the realization that many people had been laid off and they were looking for work, and a lot of that work kind of came in the form of casual jobs, and so TaskRabbit provided this mechanism to do that, which then inspired, the kind of gig economy and the sharing economy, all these other things. Again, not saying this is good, but it's shaped the way that we have shifted our economies as a result. One of the arguments is, one of the things that will come out of the kind of the stay-at-home kind of culture that has been a necessity for all of us at the moment, is that there is some friction about going fully digital. Where fully digital, I mean working from home or finding ways to interact with businesses that doesn't involve going to a physical location or premise. And while there's always early adopters that are more comfortable with it, white-collar professionals, working in consulting jobs, for example, have always been used to working at home, but others haven't been. And a lot of bosses have not been comfortable in giving people that privilege because they're concerned that they're going to abuse it. Now, out of necessity, everyone's had to move to doing all their work on Zoom and being remote and having to deal with all the distractions at home. In some way, this may have actually propelled us all forward in terms of being digital human beings that would be reliant on offices. So I think one of the big questions is this going to create a fundamental change in commercial real estate? Is there actually a need for an office anymore? Is an office nothing more than a touchdown area that you come to on a Friday to socialize? So I think there will be, to sound an optimistic tone, there will be silver linings that will come out of this, which as a result of this is going to change our culture, form a change of opinions. For example, I think we're a lot more aware of the invisible frontline workers, whether they be healthcare workers or others that put themselves in the line of danger every day. I think there's a greater realization about those kind of people. There's a greater realization about the danger of spreading disease as well. No one's going to have to be reminded to wash their hands when they come back from work ever again. So, I think there will be some subtle and some very obvious changes in culture, the way we work, the way we transact, and things of that kind of nature. And who knows? It may be that a lot of the those that have lost their jobs now, where their jobs don't come back. Maybe this is part of society changing in a similar way that we saw manufacturing kind of jobs leaving the US, with the intention that those people would then be trained into more jobs being operating computers and programming computers and more highly skilled jobs. Now, unfortunately, in that case, that never really was born to be true. But it could be that, as we start to see this subtle shift, that might happen. Another thing we might see as well is a change around attitudes of globalization. I mean, globalization has created the system now where we can see viruses spreading across the world very quickly. It's also shown how fragile our supply chain is. One of the big challenges about trying to build ventilators we're having in New York is the supply chain is mainly based in China. So I think there's going to be an interesting question about whether we accelerate this kind of nationalism where we are being very anti-globalist, which is a real change from the kind of the neoliberal policies that we've had over the last kind of few decades.
There's a guy, I can't remember where in the United States he is, but he owns a company called, I think, My Pillow. And so what he did was he has two identical factories. He switched one completely over to making masks of all things because, of course, there's a shortage of masks. And I did sit here thinking to myself, are you kidding me? A mask has got to be one of the easiest things on the planet to make. We make millions and millions of Halloween masks in the United States. Are you telling me that they can't source this fabric? And, I mean, this guy's doing it. Tons of other factories are doing it. From what I understand, there are companies who are switching over from making normally what they make in terms of liquids, and they're making hand sanitizers. And I thought to myself, why in the world would they be relying on China for something which can be so easily created? It's not like they're mining for it. They're not mining for something rare. This is a seamstress job of which everywhere in the world has good seamstresses, and people even like myself, I love to sew. So, it's not really a big ask. And even with these ventilators, I don't even understand the ventilator problem because Americans manufacture, the most technologically advanced vehicles and machinery in the world. They do. They manufacture high quality machines. What is the problem with these ventilators? Why is it such... I'm struggling to understand this in my tiny mind. And I did laugh my ass off, by the way, after you told me that Elon Musk was basically... he promised ventilators, but instead people are getting like these airway pressure machines, which are used by people who have like sleep apnea or something like that. And, so obviously he's not the guy to take care of this, but there are other plants in the United States and the world. There are plants in Europe that should be able to make ventilators. And so I know that there's supply chain issues. I understand that. I mean, for every reason in the world, I understand this. But when it comes to some of the stock depletions that many of these countries are facing and supposed bidding wars, I'm just shaking my head like, this is madness. We should be able to make, in the United Kingdom, all the grannies every year get together to knit little hats for different campaigns. There's like hundreds of thousands of hand-knitted hats that old ladies make for this campaign. I think it's a cancer campaign, right? I've bought these hats and I should know what they're for, and I don't. I'm sorry. Why the hell? If they can get the senior citizens, the blue hairs of the United Kingdom, to make enough hats for an entire country, why the hell can't we sew enough masks for the medical workers in the world? I don't get that. Ben, what do you think?
Do you know what it reminds me of? And I used to do a lot of work in innovation back in the day. Where I used to go into very large companies, and there's some interesting parallels, which is a lot of these very large companies you thought would be very, very good at innovating. But it turns out that when you're trying to innovate in these organizations, they've been so set up to do one thing and one thing only, but very, 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 very well, that anything you're trying to do to innovate, the company actually throws out, almost like a kind of an immune response. It kind of tries to kill it, either by kind of bogging it down with bureaucracy, or because it doesn't really fit into the company and the way it's been optimized.
Right.
I think this is what happened, is that we've created this fragility. There's been this trade-off where we said we want to optimize around cheap things, just-in-time delivery, where it just comes straight to the door just when we need it. So we have these vast warehouses. We're going to push everything to the cheapest place that it can be manufactured, close to kind of where it's actually been, where the raw materials are being mined, etc. And that's kind of created this operating model where, all we really do is we do all the R&D in this country. If you look at Apple, for example, you look at your iPhone, it's the R&D is being done by, Stanford, alumni and doctorates, because that's high tech. And then you look at the design of the chips and things of that kind of nature, again, done in Cupertino. Then you look at the build of the pieces. Well, that's all done in, all over the world. And you look at the assembly. Oh, the assembly's done in the States. Okay, so you can say made in America on the back. But so I think we're very good at high-tech design, very good at assembling the bits. I think where we really struggle is when you get down to the kind of plastic widgets or the manifold creation or all the bits kind of underneath, where we said, too difficult, too expensive. We can't really pay for this. And I think we've just optimized around this in terms of our supply manufacturing. And the question, it is a question we've been struggling for a while. It is one of the reasons we've had this kind of populist, sentiment about wanting to do everything, kind of made in America first, is because we've done this big trade-off, and whether we realize we've done this on purpose or not is another thing. But effectively, we've done the grand bargain. The grand bargain is that we think that we should be optimizing around having things cheap. And we are prepared to sacrifice people within our country having industry to have things cheaply. And the theory is, well, that's fine, because everyone will have this cheap stuff. So everyone will be elevated, in the same kind of way. And there's a truth to this. Even, if you are, in low income, you probably do have a large flat screen TV that, 30 years ago, you could never dream of having. But, that kind of wealth is a very different kind of wealth. It's not the wealth that allows people to kind of really have enjoyable lives. It's kind of a very materialistic kind of wealth. It's kind of very shallow. So it's going to be a very interesting next few years to see whether, if we're going to continue down this kind of isolationism route, whether we do kind of bring back jobs from other countries, and whether the American consumer is prepared to pay for a 32-inch TV that is now double or triple the price. So I think this is the thing, is that when decisions are made, there are always trade-offs and consequences, and I don't think it's necessarily clearly communicated what those consequences are until after the fact. And that could be because of political expediency. It could be because that maybe these things shifted on such a long time horizon that it wasn't apparent at the time. I don't know. What do you think?
People are always going to want cheap goods. You're right. They're always going to want them. After this, are people going to stop wanting cheap stuff? No, they're going to want their stuff. Obviously, this whole, the whole economic theory of supply and demand. And all you have to do is look at the price of things that are made in countries which currently we cannot get supply from. Even when things are made in the United States, if you look at the way that demand has outstripped the supply of those things in the United States, the price obviously has just shot through the roof. So, yeah, it's always going to be a little bit of a trade-off of your loyalty to your country versus price. Nothing's going to change in terms of the way that consumerism works, the way that people will always want to have things, like you mentioned, whatever the latest, in terms of technology, people always want bigger, better, faster, stronger. They just want things that they, by the way, can't afford, which goes back to the beginning of this podcast. I like the way you kind of link that in, because most of this stuff people are buying anyway with money. The majority of people are buying this stuff, like the flat screen monster TV, that they can't bloody afford. So it's, again, what you kind of alluded to as well, the American dream, buy. Oh, well, if you can't afford it, move and don't give a forwarding address. I don't know how that works. But it comes down to people's purchasing habits and patterns. I think they're on hold for now. Obviously, if people are personally impacted by the economy. In other words, they've lost their job, they have no revenue coming in, using the flat screen TV all the way through the example. They're not even thinking about that right now. And if they've already bought one and now they're trying to figure out how to do the payments, they're probably panicking because they know how they have to give it back. But if you've not been personally impacted yet, if you still have a job and you're still working and nothing has really hit you squarely in the jaw, even if you have lived through the last recession, the last economic crisis, a lot of people won't have learned. That's the other thing. A lot of people have asbestos fingers. They literally touch the fire more than once, and getting burned, it's no problem. I'll go back and touch it again. There will be people, if there is a global recession of some sorts, there will probably be people who lost their house in the first run who will lose it again. We've already, we started off this podcast with an example of a girl who was making $16 an hour, and she was taking on a rent that she couldn't afford. Had nothing to do with the recession. It had to do with fiscal responsibility, financial responsibility. So what do I think? Many people are living and buying way past what they can afford, and goods will become more expensive if we say, okay, you can't buy these things anymore from these countries because for some reason we're not going to import them anymore. We're not going to be doing deals with these countries. We really need to start the manufacturing here. Of course, made in the United States is not going to be cheaper because we have something called a minimum wage. And many countries still have nothing like it. If anything, they use still child labor. They still use child labor, making many, many, many designer clothing, high street labels. They're made by kids with tiny fingers. This is not something, if people really don't think that this happens, they need to, when the flights start again, go book a ticket to some interesting places in Vietnam, Malaysia, Thailand, and go have a look. Because it exists. I really don't understand how they can pay people such poor wages in Bangladesh. I mean, they pay these people, mainly girls, by the way, but there's also young boys there too. They pay them really, really horribly low wages, and they're selling this stuff for like hundreds, if not sometimes thousands of dollars. The profit margins are massive. And they're getting away with it. But anyway, that's a side along. Are people going to be willing to make the trade-off for more expensive goods that they know that it's going to be made in the United States under proper conditions? No, I don't think they'll be happy. I think they're happy knowing that they paid really cheap for goods. And even if they knew that tiny fingers were sewing their clothes, would they care? My opinion? Not really. Is that sad of me to say?
It is. It's sad, but I think true. I think there's another question, which is, can the United States continue to, just bring it full circle, can the United States continue to live beyond its means? Can the United States continue to not balance their checkbook? Can they continue to print money, hoping that, eventually their debts get inflated out of existence? Does the United States have to be fiscally responsible, or will they always be ignoring the YouTube videos that they should be seeing, and actually take some fiscal responsibility? And I think that's a very interesting question because, as you said before, the US has been propped up by a number of tailwinds which have allowed it to borrow at this kind of what would be normally an unsustainable rate. Ultimately, what is allowing them to do that is that yields on bonds have been low. In other words, there have been plenty of people around the world happy to buy all these bonds, and because there's so many people buying them, they don't have to ask for a lot of interest. And that is important because a lot of this low interest has been a way for organizations and governments to invest in emerging markets. And that's why you see a lot of this hot money going into places like South America and creating these bubbles. These bubbles end up resulting in a lot of debt because that money kind of goes out and comes back out as quickly as possible. That's because it's been so cheap to borrow money in US dollars and so lucrative to go and then lend that money in other places in the world that may not have such developed economies, which is really exporting a lot of this problem to other countries. So what you're beginning to see is these countries have increasingly carried US dollar reserves, whether it's China or other places in the world, because they believe this is a way of having stability. That if they have US dollar reserves, and that can pad things a little bit in terms of the hot money coming in and out of their economy. So if you've got the US as a petrodollar, as this ultimately the kind of the bonds that are being kind of used everywhere, and the way of financing that a lot of organizations and countries have, and now you're kind of beginning to question the US's role as being that kind of backstopped currency. And you're also seeing the US retreating from the stage potentially. What does that mean? Does this in some way accelerate the passage of the US to become no longer a kind of a global superpower? As other countries, have been able to withstand this, pandemic, and be more resilient from it. It's going to be very interesting to see what happens, because the problem is that when organizations and countries lose faith in the greenback, particularly when we're printing so much of the darn stuff, then there's a real worry that that's actually going to start to accelerate our decline, and we won't be able to come back from this, because you can't just keep printing more money or hoping that other countries are going to use your money because it's the only way that they can transact anymore. Mm-hmm. I think that's a real concern that I have.
Do you think, considering everybody's in the same boat, do you think that other countries right now are even thinking about the US dollar? I know the answer is probably a yes, but I want to hear your response.
I think countries around the world are going to be concerned about inflation. At the moment, you have free money. I mean, the 10-year yield is I think negative territory, until recently. You are going to see a situation where there will be undoubtedly inflation because money is so cheap. And that is going to be worrying for many countries, because inflation effectively kills your prosperity by eating up the value of money you have. At the same time, it also is positive if you have debts, because your debts become worthless. So inflation is a bit of a double-edged sword. So certainly if you're looking at the US dollar, you've been holding the US dollar because it helps support your country, and this US dollar is becoming worth less and less and less and less, particularly compared to other currencies. Why are you going to be sitting on that anymore? So I think certainly it's being looked at from that perspective. Certainly countries are saying, this kind of the US dollar is no longer worth anything. Why am I holding on to it? At the same time, you've got this huge problem now that it is so cheap to borrow money now, and there still are markets that are going to where you can get huge rates of return. You can get a 10% rate of return by lending money to, say, Kenya to build an airport, for example, for infrastructure. That you're going to get a lot of very kind of Wall Street kind of minded capitalist companies looking to arbitrage that difference. So it's going to be a brave new world in terms of the spill on to other countries, and it's always the emerging markets that get whacked hard from this stuff, because suddenly you get all this hot money coming in. You get all of the investment bankers lining up and saying, hey, we can help you with your infrastructure projects, we can build roads, all that kind of stuff. And then the tide goes out, because eventually interest rates will have to rise to counter inflation. And when we do, it's going to be a huge shock for these countries who've now levered up to the hilt with all this free money. And, a lot of that actually goes in corruption as well in many of these places. So the challenge you're going to start to see is these emerging market countries are going to, they'll probably be saddled with these very large loans, because they've been approached by Wall Street offering, to finance their large infrastructure projects for very low amount of money. But then, as we've seen, as interest rates start to come up, these what look like to be cheap loans suddenly start to become very expensive, particularly if they're on some kind of variable rate. And, especially in emerging market economies where there's not that much transparency necessarily in terms of where money goes in terms of infrastructure. You have hot money going in at a very cheap rate, a lot of embezzlement, inefficiencies of that kind of nature. So the infrastructure is not built necessarily as promised. And then suddenly, as interest rates then rise, you have a massive rush out of this country as this money becomes more expensive to finance. And this situation has happened time immemorial. The money is washed in and out of these emerging markets countries. We had the kind of Russian ruble crisis that was kind of a derivative of this. This is the problem, is that we no longer have an isolated economy. The price of money in the US determines everything around the world in terms of projects that get built, debt that countries take on. There are ripple effects all the way down.
Absolutely. So knowing what you know about the crypto market, and yes, you won your bet with me, what would you say to people then who are looking at the crypto markets and thinking, well, where is this going to go? First, do you think that now is the time to really look at the crypto markets, considering that there has been this jump from when you and I made this bet last week?
To be honest, Aviva, I really don't know. I mean, I have sat through numerous presentations that have shown stock to flow models, correlations against various asset classes, all kinds of very technical, very smart projections. And, well, a lot of these projections do say, look, if you look at the appreciation of Bitcoin on a logarithmic scale, and you kind of apply these kind of broad models, that yes, over time it should absolutely kind of start moving towards that magic number of, $100,000 or whatever people are saying. And that is kind of the long-term view. I think a lot of asset managers and investors in this space to hold that, eventually it will get to that point because that's what the models say. But then again, models are just models, though. All models are doing are taking the history and trying to look in the crystal ball and make sense of the future, And there are people whose sole job it is in life do nothing else but try and forecast these kinds of futures. I think cryptocurrencies are great as an education, as a way of teaching you about some of the topics that we've discussed across all these podcasts, about what the actual essence of money is, understanding things like correlation of assets, understanding aspects such as fear in the market, and sometimes when that fear is actually a buying opportunity. So when I first kind of got into investing or even kind of trading, I was told, never invest more than you are able to lose, but also to do something, even if it's a very small stake, because it focuses you and it gets you learning. If you have a little bit of skin in the game, then you are going to go deep into Bitcoin. And maybe it's on the financial side, or it could even be on the technical side. It certainly kind of helps you kind of learn. If you have the money to lose, by all means, have it in your back pocket as part of your portfolio, which is about taking moonshots. And it's certainly appropriate to have an allocation of your portfolio in an area which is high risk. And it may be that might outperform and be worth more than the rest of your portfolio, or it may not. It may actually not perform well, but that's fine because it's a small part of your portfolio anyway. On balance, you're okay. What I certainly wouldn't do is go to BitMEX, with a famous leverage trading system, put 100x bet on because, Ben Jessel said, $100,000 one day, and then end up losing your house.
Exactly.
And a lot of people do, it's sad to say, but I think the part of the problem with people who are trading is that bear in mind that 90% of day traders stop because they lose money. It's the most exhilarating way of losing your money. It's like being on a roller coaster, which only goes down, but with, exhilaration down all the way. But certainly I've learned through a very small investment, I've made, not investment, but money I've apportioned. I've learned about technical analysis, how you can kind of draw, certain lines on stock charts or look at oscillators and things like that. And I lost money doing it. It's the general theme about my investing or my trading. But it taught me about some really interesting things. Fibonacci retracement sequences, things of that kind of thing, of that nature, which helped me self-educate because I had a bit of skin in the game. And I think that's kind of an interesting way of taking it.
I agree. It is a good way of actually increasing your financial acumen, understanding what goes on, what is behind each cryptocurrency, what's behind Bitcoin, Ethereum, how it operates. It's a good idea. And the great thing about the SEC is that they have a full library of documents on how to invest. They literally call it, again, they're probably copying us because, of course, we have the Beginner's Guide to Crypto and Blockchain, the Beginner's Guide to AI, all of that, which is published by, of course, us here at Savvy Media and Savvy Publishing. They have online the Beginner's Guide to Investing, and they also help people understand about finance and taxes. And you should. It doesn't matter where in the world you live. You should be reading these documents because they are written by professionals. They're written by professional accountants and economists So you should avail yourself. It's sec.gov. And if you look around, there's investor alerts, investor information, reports, publications, tools, and calculators. Educational resources abound. So I invite everybody to not just look at their resources, but listen to our podcast here at cryptoandblockchaintalk.com. Read books such as the ones that we put out ourselves on The Beginner's Guide to Crypto and Blockchain. Even the book for children, Meet Bob the Block Train, which, by the way, sells to more adults than kids, I think. But the whole point is this: educate yourself, become financially savvy, and just absorb as much as you can. On that note, Ben, thank you again from the bottom of my heart for coming on to Crypto and Blockchain Talk. It is such a pleasure to have you on here every single time. And every single time I'm going to tell you, and every single time I will tell you what a pleasure it is.
It's always fun. Thank you for continuing to invite me.
Well, and you know it's not going to end there. Thank you so much, our army of listeners. We really love the fact that you tune into us on a variety of podcasting platforms, and that includes Acast, iTunes, Podbeam, Stitcher, Spotify, SoundCloud, and so many more, with the full list on cryptoandblockchaintalk.com. We also stream this entire podcast on Crypto 24 Radio, which plays not only these interviews, but breaking news, music, and some other little tidbits that we throw in there. Again, that's crypto24radio.com. We love hearing from you, and it doesn't matter if it's on our Twitter, Facebook, or Instagram pages. We love hearing from you directly. So please email us at education@savvydigital, that's SAVII digital, education@savvydigital.com. So take care, be safe, and goodbye.